Well, welcome back in, everybody. I know it's been a minute since I've posted, but I told you guys I was getting ready for possible downturn in this market, and I want to prepare myself and my family for the best possible scenario here to capitalize on opportunities going forward. Now, if you're new to the channel, we've really focused on talking about the economic backdrop, working on individual stocks, and I thought now would be the best time ever to position myself to really capitalize on maybe opportunities that come. And if these opportunities don't come, then I'm just accumulating cash here. So let's give you an update on exactly what has been going on. As of right now, I am wearing the ears. With my household income, we have two streams of revenue, and now I'm adding a third stream of revenue doing security at Disney. Multiple reasons why we've decided to do this. Obviously, I can make more money doing something else, but I felt like security is very defensive if we go down to an economic downturn. One of the last opportunities for layoffs is going to be security. The parks are still going to run, but you got to make sure that it is safe to run the parks. And so I thought this was a good opportunity to do something low stress, make some extra money, and the benefits are really helping my family, and let me explain. As I stated, I have two streams of revenue in this household. This will be our third stream of revenue. Not only will this be our third stream of revenue, but we have a Roth 401k plan with Disney with an 8% match, which is pretty nice. Then we throw on the fact that me taking this job allows me to get between 20 to 40% off on all Disney products. And if you guys know my wife, we go to Disney a lot. So this is a game changer for us personally as well. On top of that, we're also going to save on our health benefits. My wife and I spend a lot of money on health insurance, so leveraging Disney's health plan is going to save our household between $30,000 to about $55,000 a year. So this is a pretty nice opportunity for us to build some cash, get aggressive on saving, and if we see interest rates come down, then I will have an opportunity to possibly buy a rental property. Because I'm a W-2, it's easier and quicker to get approved for a loan. So multiple reasons why I decided to take this job. How long am I going to stay there? I really don't know. This is my first week, so let's dive into exactly what I did in my first week of work. Most of you may not know this, but I do have a military background. Prior to being in financial services, I joined the military when I was 18 years old, did a tour in Iraq in 2003, and so going into security is pretty natural for me. I can clock in and clock out, pretty low stress situation, and you're at the parks where most people are pretty happy. So overall, my first week, we were able to put $435 aside in my first week. And if we take a look at these investments here, so the one downfall I do want to state with investing in a lot of companies, 401ks or IRAs, is the fact that there is not a tremendous amount of opportunity. You're really limited on what you can pick here, but I did pick the Vanguard S&P 500, not putting a ton of money in there because I'm more interested on being a little bit more overweight total stock market index along with emerging markets. So you guys can see kind of how I'm diversified here. And 5% of my income I am putting towards Disney. I'm paying the mouse back for giving me this job. Not only that, but when I look at Disney as a whole, it's kind of sitting in fair market territory. And if we go into a recession, the stock's going to get very, very cheap. And I do like all the things that it has to offer. They're in multiple countries. They have hotels, they have parks, they have streaming. So for me, it's a well-diversified consumer discretion business, and I do think that it's fairly valued, and I do think it's going to get cheaper. So why not own a little bit and give back to the company that hired me? So as you guys can see here, these are the names that I personally chosen to invest in here. And when we take a look at the emerging market index, this is the one that I actually might go a little bit more overweight on here. You have Taiwan Semiconductor, which I personally think is actually getting pretty interesting here. Tencent, Alibaba, Samsung. I actually like a lot of these names here. And so that's why I'm very interested in these names, especially Taiwan Semiconductor. There's 1,235 holdings within this index, so I like the diversification as well. So that's kind of been the recap of last week. I've obviously had to go through training. This was my real first week of work, and it's definitely getting hot out there. It's definitely a little demanding, but I will say, because of how busy the parks are, it makes the day go by faster. Now, as I stated, this could be something that I do for the next 3 to 4 years. This could be something that I do just for a year, but I want to get aggressive on saving. We have to build our emergency account. So what I'm doing right now is 50% of my money is going into those indexes that I'm showing you from work every single week. And then the other 50% we're going to use for fun money and building out our savings account for an emergency or rainy day fund. We want to get up to about 8 to 12 months of living expenses in our account. So we would like to see a savings account of upwards of $30,000 to maybe $40,000. So that would be the goal for this year as well. So we want to build our savings account by the end of the year, maybe up to 25, 30 grand. And then we also want to get aggressive on buying the stock market as we're seeing selling off here. Now, a lot of experts believe we could be heading into a long-term bear market here. We talk about cycles on this channel a little bit. And when we think about recessions happening on average around 6.5, every 6.5 to 7 years, we see a recession. And we really haven't seen a true hardcore recession. We haven't seen a depression in some serious time. Now, a lot of people want to call COVID a recession. To me, this is more of a little bit of a black swan event. It wasn't something that we created within the financial markets. And then when we look at how we resolve the problem, I actually think it created some asset bubbles that could cause a longer term bear market, which I do think we are possibly heading into as we get in the latter part of this year. So what am I doing? I'm starting to dollar cost average into here. I'm not trying to time anything. I'm just slowly averaging in money here. And if we're in a bear market for 3, 4, 5 years, then maybe I stay at this job, I stay aggressive. And when we start coming out of the bull market, we see where we're at, and maybe I change my career path to something that's a little bit more aggressive on the opportunity to make more money. It's maybe something like real estate, maybe getting back into financial services. But what I wanted to do is get somewhere safe, get somewhere where I can make some money, and get somewhere that has some good benefits for me and my family. And so that's how we landed here. Now let's talk about what is going on with my individual stock picking account. When we look on a year-to-date basis, I'm down less than 1%, while the Russell's down 13.6%, S&P's down 8.2%, NASDAQ down 13.3%, and the Dow Jones down 6%. So I'm actually holding my own here. 50% of my money is in cash and cash-like instruments, with the ability to drop in another few $1,000s here that are sitting on the sidelines waiting for big opportunities. So I'd say overall, I have about 55% of cash sitting on the sidelines in roughly a $42,000 account right now. So these are my individual stock picking accounts. Once again, this is a Roth contribution, and my 401k is a 401k Roth. So I'm creating a I'm trying to create a lot of liquidity within a tax-free profile. So when I do enter retirement, taxes are not going to be an issue. If we look at government spending, I definitely think tax increases are going to be on the table at some point in time. If the trade talks don't work, if the country can't get its financial balance sheets in check, I definitely think the only lever to pull is cutting from spending and or raising taxes. And so you definitely want to take advantage of your tax advantage accounts. So get aggressive on those. And when I look at the market kind of dipping here, I think we don't know what's going on here. We have tariffs on the table at one point, we have tariffs back off. Seems like China is really stepping up to America at this point in time, and could be a conflicting story that plays out for multiple years and could actually cause some pretty substantial turmoil. Now, if you're wondering what could cause a recession, to me, the volatility both in the bond market and the volatility in the stock market could actually create some serious financial dysfunction here. We take a look at the consumer tapping out, and we also take a look at delinquencies picking up. Now, the last catalyst, in my opinion, is going to be that unemployment. I believe if unemployment ticks above 4.75%, we're going to see a big problem here, because the cost of living is so much that anybody that is not making enough money or is unemployed is going to be drastically impacted. So let's go back to the volatility side of the story. When I look at how volatile the bond market is and how volatile the stock market is, I think many companies are over leveraged that we do not know about. It has been a very easy market to invest in, and I think people are over leveraged. And the volatility that's coming is telling me that people are trying to reposition without going broke. Now, what ends up happening is if we have a massive sell-off and people are 10 to 1 long, well, we could see some massive problems. Institutional investors actually have been selling out of this market. If they underperform the indexes, they are forced to buy back in by algorithmic trading to catch up to market performance, because at the end of the year, if they're not competing with the markets, then they're going to get fired. So there's almost a trigger that happens to chase into big explosions as well. And so I think we are I think we're in some pretty interesting territory here with this volatility, that we could see maybe another bank run. We could see maybe an implosion on a financial institute that nobody saw coming. And so I definitely think cash is a decent position, especially if you're looking at some of these money market accounts that are paying about 4.15% to even more than that. Pretty compelling story to be that liquid and earn a 4% yield when we look at the market being down year to date. As always, guys, just want to drop in a quick update on what is going on. So hopefully you follow this progress that's going through. That I'm going through here. I'm working here. I thought the channel would explode, but didn't. I thought the channel would have done better, and I could have used that money to really create videos on a daily basis that are more impactful for people. But unfortunately, I have to do what's best for my family. And the best thing to do right now is take advantage of any opportunities I see out there. And so getting us some health benefits saves us a tremendous amount of money. Being able to contribute to a tax-free account is a great opportunity. And then building our savings account up right now, I think, is a tremendous opportunity as well, because who knows what opportunities are going to come down in the near future. But the last thing I want to say is the worst position to be in is not having that capital on the sidelines when you see once in a lifetime opportunities.